All right, and we're back recording. So, we have, yeah, it's not rocking with me right now. All right, so for this week coming up, today, Monday, is a Canadian holiday. So if you trade USD CAD, it's going to probably be a strong bias. I'm surprised it's only a holiday for Canada. Like, why is it not a holiday for, UK? That's interesting. It's Victoria Day, so I'm guessing that's Queen Victoria. But we're also going to be getting medium impact news, right? It's not going to be, let me close out TradingView real quick. That should help, right? So it's going to be medium impact news, right? So two types of news that we kind of pay attention to is the 2-star news and the 3-star news. If you're using something else, it might be orange folder or red folder. But medium impact is what the orange folder or the 2 stars mean. And we'll be seeing that around 8:30 a.m. as well as around 10:50 a.m. on US dollar. Both of them are going to be like conference style, so nothing crazy should happen at the moment of 8:30, but it's just kind of just be expecting that I will probably show up to the markets tomorrow because there's a liquidity event, right? And given that we're talking about liquidity today, the reason that I pay attention so much to when the news is going to release is because news is excuses for money to flow into the market. All right. So the way that we specifically trade, or that I specifically trade, or if you're learning similar ways to the way that I trade, or even if you're just learning a couple of the fundamentals behind the way that I trade, is that I am looking to execute the types of moves that I'm looking for. Is big money is going to be moving with those moves, right? Like, we should get expansionary type moves, right? Typically, if I get into an opportunity and it like stalls or it's very stagnant, like, I kind of know from the beginning, like, that's not what I'm looking for. And typically these news events give us the best times for that liquidity to kind of come into this thing and move around, right? So 8:30 a.m. on Monday, we're going to hear from an FOMC member. I personally like to watch those meetings, right? I don't know if anybody else is into that type of time, but you can click on it, and then from there you can click the source and you'll be able to watch the release, watch them talk, and you can kind of just listen to hear what they talking about, right? And hear what they kind of hinting at. I like to assume that they're not telling us the truth. All right. So that should kind of give you an idea of how to read what they talking about. If you don't know nothing they talking about, just know that whatever they said he did that. All right. He lying. Very simply. All right. So Tuesday, first and foremost, let me kind of cut this down real quick. All right. We're going to pay attention to high impact news now that we see what's going on Monday. Okay, so Tuesday, wow, a lot of high impact news dropping on Tuesday. Okay, so you'll see a lot of volatility in London session, right? We're going to have Euro high impact news, PMI, as well as GBP. So GBP and EU, both of those should see a lot of liquidity flowing into the market during London session. And then we're also going to be seeing US dollar news 8 a.m., 9:45, and 10 a.m. on Tuesday. All right. Like I say every single week about 10 a.m., guys, like, typically, man, like when I see news at 8 and at 10, I'm looking to expect some type of retracement at 10 a.m. Typically, if I get into a move at 8 a.m., I wouldn't be surprised to see the move replay out at 10 a.m. So that means one of two things. It means either be patient until 10 a.m. to actually take your move, or for me, I'm still going to take my 8 o'clock move. And I'm just going to probably take more partials, or I'm going to get out of the market early, because at 10 a.m. they probably are going to go ahead and introduce some type of a Judas swing, aka fake move, before they deliver again at 10 a.m. right? So you can keep that in mind, and it really helps with indices as well. So if there's any indices traders in here, that should help you out. Oh, wow. Okay, we got FOMC this week, folks, right? So Wednesday, we're going to have US dollar FOMC at 2 p.m., which means that it probably will trade London session on Wednesday and just kind of stay away until around 2 p.m. I've learned my lesson enough times, and we'll talk about that in a moment. But we'll also again be having a tight London session, right? 2 a.m. news and 4 a.m. news, as well as 5:30 a.m. The governor of the Bank of England will be speaking. Similar to our FOMC, right? Similar to our FOMC. So probably, you know, if trading GBP type of time, you could probably just wait till that 6 a.m. kill zone. But if you're trading anything else, I mean, you'll be smooth, right? And then again, 10:30 a.m. news on Wednesday, and then 2 p.m. That just looks like a setup. Like I'm just gonna be honest. What my lesson has been is that typically whenever there's FOMC, which is the Federal Monetary Committee, right? The people who determine the interest rates, that's them meeting, okay? Now, this meeting is not going to be them giving us new interest rates, and I've been told that it helps when I re-explain this multiple times. So, you know, at the end of the day, appreciate that, Lord Beckford, right? Yeah, you know, if you're getting some value, definitely post on your story and tag the guild. It'll help us out, right? And don't forget, we have that 10K account giveaway going on, right? So maybe, you know, maybe if we get some reposts, you know, that'll definitely help out, okay? That, because when we get to 250 followers, I'm gonna do the giveaway. I'm just saying, right? So I would recommend, if you're participating in that, you know, help us promote this thing, right? But with that being said, when it comes to the interest rates, guys, all right, when interest rates are raised, the US dollar gets stronger, right? Because at the end of the day, it costs more to borrow the dollar, right? So it causes the demand for the dollar to increase and the supply of the dollar to go down, which means the price is going to go up. Supply and demand, right? Low supply, high demand, high price. So when they raise interest rates, the dollar is going to push up. They've been raising interest rates for months now, so we are not surprised by the bullish movement we get on the dollar right now. We actually desire that. Like we actually are expectant of that. And usually these FOMC meetings is where they release that information. But this meeting specifically is not going to be one of those. You can tell because it doesn't say any percentage here, you know, for FOMC. It doesn't say anything like that, right? But you can see that it's a FOMC meeting minutes, which means that we'll get some type of an update as far as, we'll get some sort of an update as far as what, we'll get some sort of an update as to what they're thinking when it comes towards the interest rate. Remember, guys, rule number one, if you're going to watch these guys live, you can't watch it live because it has like a papers next to it. That means it's not going to be a conference or something. It's going to be a document you can read if you're a news head and you want to be aware of that type of thing. Whatever they say, they're probably lying. So just look at it like that. And if you're not a news head, like you're more of just like the charts speak to me, I'll show you when we start talking about liquidity, I'll show you how to kind of see the news through the charts. You feel me? Or one of the ways. We ain't gonna go too deep into it today. I'll do that maybe another week if you guys get some value from that today. All right. Thursday, Euro news again, London session. US GDP is going to be dropping from the first 3 months of the year, as well as 8:30 a.m. news. And then we're going to also be having 10 a.m. news again on Thursday. So it's going to be a very volatile week. A lot of opportunities for the money to flow into the market, as well as a late week, right? A lot of late news releases, and if possible, we could be done with this thing before Friday. That would be great. So yeah, we're gonna go ahead and leave Brave alone now. We're gonna leave the internet alone because they acting real weird to us right now. I don't like how she acting. It's acting real weird. But now we're gonna go ahead and dive into our charts. We're gonna see what we got going on, man. Now, hopefully the chart's not acting weird to us, man. If it's one thing that shouldn't act weird to us, hopefully it's the charts. All right, now, before I dive into our dollar analysis, right, kind of give you guys a little cheat code. If you're not aware of the bonds market, okay, you can kind of look up this pair, asset on TradingView. It's the US 10Y, right? United States 10-year government bonds yields. ICT talks about it, right, often, whenever he's talking about like the market out, his market outlook or his market commentaries and his trainings, he talks about how he uses this to basically understand where the money wants to flow when it comes to the government. All right. These are also an idea of interest rates, but it's the opposite, right? So whenever this is trending higher, typically the dollar will be trending lower. And whenever it's trending lower, typically the dollar will be trading higher, right? So, you know, you can kind of get an idea that this has been consolidating for about, you know, about like a month in itself as well. So it's no surprise that the dollar's been consolidating. Matter of fact, this makes me actually want to bring up something that I dropped in the server. And I'm gonna go ahead and pull that up real quick, right? Something I dropped in the server, in the hub, okay? And he was just talking about this, right? And he says right here, right? This is similar to what I'm looking at, right? The ZBM 2023. He says, what has price been doing for the past 2 months or so? He said the market's being held in consolidation. As long as it is, the markets will be range bound, and it's best to just scalp it intraday. You're not going to get a lot of swing moves in this type of market, right? He said, when I see these type of conditions, I typically take off and do things away from the market. Hence why he's been on a road trip for the past 2 months. Understand he's been trading for 30 years, so he might have an idea of what he's talking about, right? The market is seeing very little in terms of institutional sponsorship. The big boys or deep pockets are not interested in making any significant trades on future price movements. The uncertainty of the times has them being conservative of risk, right? With the above mentioned, you can look at something like S&P 500 and you can see that it's pulled back into a consolidation as well last week, right? Again, he said, when I see this, and he's expected much of the same, he never regrets taking a break during these periods, right? Yeah, so that's, you know, that's all that I'll point out from that, right? But again, you know, the guy who's been trading for over 30 years is telling you when you're looking at, you know, the bonds market, if you seeing that thing consolidate, it's literally showing you what big money wants to do. Like whether you looking at the news or not, whether you seeing where liquidity is flowing or not, this bonds market is consolidating like this. They ain't really interested. Now, what I find interesting is that I had these highs on the bond market mapped out, and the bond market has been slightly just in this range in general for a while now. But in February, we saw them, you know, trade higher, take these highs, and then we saw them trade lower, kind of give a bit of a lower low, form a high here, and I had this highlighted and, you know, kind of this premium, because if we look at this drop, right, this area in itself is kind of the premium, right? It's where sellers would be interested in the market. Now, the dollar and this is supposed to be doing the opposite thing, but they're both doing the same thing, right? And that typically is a sign that big money is actually becoming interested in the markets, right? When things that are supposed to be going the same direction as each other or supposed to be going the opposite direction of each other are not doing that, it is a sign that big money is about to start having a party. You feel me? So with that being said, just based off of the way that this looks, the idea that we're kind of looking at is like, how do we know the dollars really wants to keep going up? And from what I'm going to show you when we look at the DXY, as well as from what I feel looking at this chart, I feel as though what they just did is they just swept the highs of April, pulled into a premium on the bonds market at the same time as giving higher highs on the dollar. It's giving very much that they're going to drop on the bonds market now. And remember I said the dollar does the opposite of the bonds market. So if I'm seeing price action that the bonds market wants to trade lower, then I'm feeling confirmations that the dollar most likely will want to continue higher. All right. So that's the reason that I showed you guys that. Just like anything else, repetition is the father of learning. You're definitely going to have to hear that a couple times so that you can get this. And the recording for these are definitely on YouTube. So you can replay that part like 900 times so that you can get it. But once you get it, I promise you, it's definitely going to help your anticipatory skills when it comes to the charts. Now we can go ahead and take our little happy behinds over to the dollar. All right. Doo-doo-doo. Now check this out. Let's wipe our charts. The dollar's it's a little, you know, when we in these type of times where it's a lot of weird stuff going on, I'm gonna be honest, you might have to look at a couple different dollar charts because they be lying. Like I told y'all, they be lying. But just know, we talked about this about 2 market outlooks ago or 3 market outlooks ago. We talked about these highs here getting swept, and that's what we just went ahead and ran last week, right? We just ran above these highs. But you know, we didn't get like it wasn't the type of situation where we got like a wick, right? We didn't get just like a wick up there and then the market, you know, traded back lower, right? We got, what's the word? We got, I can't think of the word right now, but we got sure price action, right? Very secure, you know, higher highs confirmed, right? Higher lows confirmed. Come on now, don't be doing this right now, right? We got very secure price action. Like it was very strong, right? It wasn't just, you know, a little wick. Okay. Now this brings me to want to talk about, again, external and internal liquidity, right? So if you guys are familiar, right, liquidity is just money. Right? At the end of the day, if you're looking to, it doesn't matter what your strategy is. It doesn't matter if you trade ICT concepts like I do, smart money concepts. It doesn't matter if you trade order blocks, fair value gaps or not. You can trade trend lines for all I care, right? At the end of the day, liquidity money has to be in the market for the market to deliver where you want it to go, right? So at the very minimum, I think it can help anybody to have an idea of understanding where liquidity is located and why liquidity is located, right? This is really the most important thing about the market. If you guys checked out that Market Douglas video that I had sent out, you know, in the server, it's like at the end of the day, your strategy about knowing where to enter the market, I mean, that can all be cool and well, but you got to know why, right? And at the end of the day, you're still never going to know because somebody else can, you know, want the market at a better price. And that's kind of what we can see here. Now, when it comes to liquidity, all right, liquidity is typically located, commonly, liquidity pools are located in 2 places, okay? Above highs and below lows. All right, that on every time frame, right? There's liquidity above a high and below a low, right? That's where you're gonna find liquidity pools. So at the end of the day, right? When I start off on the higher time frame, all right, first thing I'm identifying, and I don't care if you trade on the 1 minute, it's still important to me at least once a month to look at the higher time frame, at least once a week to look at the higher time frame, right? Because even if I trade on the 1 minute, I got to pay attention to the 15 minute and know what the 15 minute kind of has an idea of doing for me to, you know what's going on, right? And I don't know what the 15 minutes doing if I don't know what the daily's doing, and so on and so forth, okay? So looking at the monthly, you can see something we were targeting coming into December and January. If you go back and watch any of our market outlooks from December and January, we were targeting these lows from May 2022, May 30th, 2022, right? Down here was a monthly low, right? And I'll go all the way out to the monthly time frame. Matter of fact, yeah, we'll stay on the monthly for right now, right? On the monthly time frame, this was monthly sell side. Matter of fact, I'm gonna do what I said. I'm gonna stay on the weekly, and just so you guys understand why I'm gonna go to the weekly is because on the monthly, like, yeah, this was a low, but it's not really a validated low. And a validated low would be a point where you got the low here, right? And then you have 2 candles, right, that kind of create lows or highs to the left and 2 to the right, right? And then this low is in the middle. That's what we call a swing low. As you can see right here, we have a low, right? But then the candles to the left of them to this candle are not above it, right? It's below it. And the candles to the right of it are above it, right? So this on the monthly, it's not as pretty as we would want it for us to be paying attention to it, right? So like I said, we're going to go ahead. Oh, do I not need the undo button? Right? So we're going to go ahead and we're going to take our happy selves down to the weekly, right? And on the weekly, you can see what? The low, right? And 2 candles above it, 2 candles to the right of it, right? So I'm going to use the weekly time frame, right? Weekly sell side liquidity. All right. And we were paying attention to this, right? That was after the market closed below here, right? That was the next place for us to pay attention to. All right. And they came down into that in January and they gave us a higher high, right? So now after the market formed a low here and a high here, the range that we are trading in on the weekly time frame is this high here and then the low down here, right? That's the range that we are now trading in. Okay. The reason that the range is important is because now we have external liquidity down here and we have external liquidity up here based on this time frame. External just means the top and bottom of a range. So you have to be able to identify the range. Okay. And I mean, the range is just going to be from a higher high, from a swing high to a swing low. And on this time frame, the most recent swing high was here and the most recent swing low was here. Okay. Hope you guys are following what I'm putting down. Right. And if you're not, you in the guild, so you can ask a question. It's not like you watching a YouTube video. You feel me? So if you got a question, you can ask the question in the chat. It'll help me. But right, if you're with me, then great. Okay. So we got a swing high here. We got a swing low here. All right. Those are the only two ones. As you can see, in between that, it's just straight drop. There's no swing, nothing. This is just straight lows and lows and lows, right? This high is not a valid high, right? So from here to here is the range, right? From March 6th to May 1st is the range. So that means that this here is our external liquidity, all right? And this here is our external liquidity to the high side. Yo, Maverick, why does external liquidity, like, why does that matter? Like, why does it matter what you know, what's external and what's not external? Oh, I got you, bro. All right. It's where I put the lines, right? It's where I put the lines, right? So you got your swing high here and you got your swing low right here, right? Now, before this move right here, okay? You got your swing low here and you got your swing high here, right? Because you got a high and then below this high, you have two candles below it, to the right below. You got two candles to the left below. And then the same thing here. You got a low and then you got two candles to the left above and two candles to the right above. Nothing weird like, you know, here wouldn't be a swing high, right? Because you got the high, but there's not two candles below it, right? It's the other way around. Okay. So like I said, repetition is the father of learning. Exactly. Yes, Shirley. Right. Repetition is the father of learning. So if you got to rewatch that one a couple times, I definitely understand. Right. But you'll get, right. You'll get the swing lows. Okay. As long as there's two candles below to the left of a high, it's a swing high. As long as there's two candles above a low to the left and to the right, it's a swing low. You feel me? Some people call it, you know, an FU candle. You feel me? So, you know, that kind of should help, right? It's like you need, you know, two fingers to the left of the finger, you know. All right, I'll just leave that there, right? If there's not two fingers to the left, that ain't no FU, right? So, you know, you need two to the left and two to the right, right? So yeah, one of my old man, it is hot in this thing. Can you? Yeah, thank you. Or just turn the AC on, actually. All right. So that should help. Okay. So now that's how you identify a swing high or a swing low, right? FU candle. Okay. Now between the swing low and the swing high on any time frame is the range. Okay. But remember, the reason that we like to start off on the weekly, the daily, and the monthly is because big money makes decisions based on the daily and higher. Big money big money is not sitting here looking at the 15-minute chart, fam. It's not what they're doing. I promise you. That's not what they're doing, okay? And so at the end of the day, we want to see where they're kind of making decisions. And they making decisions based off of what's going on up here and what's going down here. All right? So this is important. Why is this important, Maverick? Well, because here used to be our, you know, external, you know, liquidity. They traded below that and then they gave us a big push higher and gave us a higher high here. Okay, this high is higher than this high, right? Gave us a higher high here. So from that already happening from January, it gave me like an inclination like, okay, this might be the beginning of us starting to see a bullish move. Why? Because external liquidity was taken. And typically when external liquidity gets taken in an uptrend, they're going to have to deliver to external liquidity on the upside for them to, you know, come on back down and break anything that they want to do down here. You feel me? So even if we want to trade lower, I'm looking to see them in some way, shape, or form go ahead and trade back up to this, you know, to this liquidity up here, or what used to be here, before I see them trade lower. And we saw them do that, right? They came up and they formed another one here, right? And then they trade lower. Okay, so now we have our range. Okay, we got the sell side liquidity external, and then we got the external here. So now I'm gonna go down to the lower time frame, right? Now, with that being said, looking on the lower time frame, okay, we saw them trade down below external sell side liquidity right here. All right, that's a lot of money. That's a lot of liquidity, right? That's weekly liquidity that was swept with this move right here in April. Like we all saying, yeah, it was a lot of consolidation in April. Why? Well, they were accumulating orders, right, above an area of weekly sell side liquidity. It's a lot of people who just didn't know what the heck to do with their money when this was happening. We call that accumulation, right? So they were accumulating orders to the sell side and to the buy side, right? And guess what they did, right? We saw them take that liquidity right here first, okay? Let's see if my computer is going to be okay with me doing a little rewind real quick. Lord Jesus, right? It's going to be pissed. All right. So, right, they swept here, right? April 13th, right? Swept into that sell side liquidity. Then we saw them go ahead, give us a bullish, right? Bullish engulfing, right? Which now makes this an order block, right? Order blocks are important, especially when they're coming at the bottom of a range. You might want to write that down. A lot of people get confused with order blocks because they're just looking for every single place that they see an engulfing candle. That's not the way that it works, guys. You want to look for order blocks when the market is raiding areas of liquidity. That's when you want to look for order blocks, right? When the market raids liquidity, you want to look for the order block, okay? Yes, there is such a thing as internal liquidity, and we about to get into that right about now. You feel me? So once we saw this order block form here, right? My next prerogative is going to be what Shirley just asked for. I want to identify areas of internal liquidity, right? Because even if they ain't making it up here yet, guess what? You just swept external sell side liquidity. They're not going to go any lower without taking some type of liquidity, right? Like they're going to stretch for it. And the confirmation on that is not, when you get really good at this stuff, then okay. But for right now, as somebody who maybe you're not as confident in these concepts, once they sweep that low, right, you want to wait. Okay. Once they sweep that low, you just want to note that in your head, like, okay, I see how you moving. You feel me? And you want to wait and see if you see a bullish engulfing, right? If they sweep the liquidity on the low and then they give a bullish engulfing, now you can kind of get an idea as to, okay, I want to go ahead and see them start targeting our swing highs on a lower time frame, which would be what we call internal liquidity, right? Because on the weekly time frame, all of this is a drop. There's no highs for you to identify. So you are forced now to go to the lower time frame and identify areas of buy side liquidity. And any areas of liquidity that are inside of this range are internal liquidity. Okay? So external liquidity is going to be the high and the low of the range. Any highs and lows inside of that range is your internal liquidity. Okay? So with that being said, on the daily time frame, I have the high here, right? Boom. That I'll mark as daily buy side liquidity, and I'm going to put internal. Okay. And this is just, like I said, real quick, teaching you guys the difference between external and internal liquidity, right? Because when you're able to identify these things, it can kind of help you guys. Like I said, no matter what your strategy is, it can help you guys kind of identify what's going on a higher time frame, right? Of course, this also would be another one, right? And let me actually just copy and drag up here. Boom, right? And another one, boom. Right, and another one, boom. Right, all right, we're gonna stop on that one, right? And so, boom, let's see, you know, from there, it's what? And so the way that we trade order blocks, of course, is that once the order block is formed, you would wait for that next candle. You know, preferably you would want it to be the very next candle after the engulfing, right? That would be your preference, right? Would to be to enter on this very next candle when they trade anywhere within back into that order block. And then go ahead and, as you can see, you get the expansion from there, especially after they sweep an area of liquidity, especially after they sweep an area of external liquidity. So let's say that you're somebody like my brother Steve-O, right? My brother Steve-O is always busy. Okay, he's traveling, he's recording content for people, he's helping other people, you know, develop their businesses and develop their brands. He does not have time, honestly, to always be on the charts looking for raids on internal liquidity. But what he can do is he can identify external liquidity on the weekly and the daily time frame, and when the market, and put an alert at external liquidity, and whenever the market gets to external liquidity, he can then look for a bullish engulfing candle, a big old engulfing candle, right? And then he can then trade from the re-entry on that, and then he can leave it alone, right? And his targets would be the buy side internal liquidities, or if he wants to be frisky man, he can aim for the external liquidity all the way at the high, right? But the idea is to make some money, right? So just take your internal liquidity and let it go, right? But that is a way that somebody can literally just, when the markets are most likely to deliver, are when they swept the lows of a range or the highs of a range, give you a bullish engulfing or bearish engulfing, you take that next move on the retracement, right? And so let's see, they respected that order block. They swept the lows one more time, but still, right, inside of that order block. And then we saw them go ahead and trade to the buy side internal liquidity, right? Boom, again. And I'm gonna go ahead and slow this down real quick because this is what we were talking about last week, right? Last week, coming into last week, this is what it looked like last market outlook, right? So even if I would have took the buys here and they didn't go ahead and take that range, once I saw them go ahead and give us a higher high, right, trade on down and came back in here, I said, guys, we gonna pay attention to what the market does this week. We got an engulfing candle on this day, and guess what? Let me move this now, all right? Boom. Boom, all right? You saw them give us another engulfing move here. And then from there, my target was here for them to trade back into it again here. And then they went ahead and just violated the rest of the buy side internal liquidity, right? So that's the difference between external and internal liquidity and how you can kind of use it. Now, based off of what I was saying about the bonds and all of that action, we can go ahead and end this rewind now. It's wiping out my computer's not liking it, right? But with that being said, what I said about the bonds market, so the reason that I took us to the bonds market first is because me, as a trader who's looking at this now going into this week, it's kind of the idea is like, how do I know that they're going to go ahead and continue trading up to this external liquidity? And for me, it's the simple fact that, or not, I don't know, right? But why is my bias targeting, right, the external liquidity up here, or at least the internal liquidity still to go up here, right? That's the next form, the next buy side, right? And that is because, again, on the weekly time frame, they swept down under here and they started to give us higher highs, right? And if I go back to that weekly, on that weekly time frame, they still have not traded anywhere near, right, any of this, right? This is all just imbalance. There's nothing really to give me that they're ready to turn around. And when I look at the bonds market is in an area where they're going to want to sell off from. You feel me? All the news, for those of y'all looking at the news, all the news is bullish US dollar news, right? I mean, it like I said, you have a lot of divergences happening where things are not lining up the way that they supposed to. Go back and watch the last market outlook from last week when we was talking about the unemployment rate. It just doesn't make sense. You feel me? Like somebody got to be lying. You feel me? And you got a lot of people that are dumping money into stocks and things of that nature. They're getting rid of the US dollar. You're seeing all this news about the destabilization of the dollar. I don't know if you guys just saw Iraq just banned the US dollar from being used in their currency. You feel me? So I definitely can see them continuing to dump money into the US dollar and at least see us take these highs, this buy side liquidity with a wick before I believe that they're, ready to go ahead and turn around, right? Because at the end of the day, when I see, man, I'm trying to really remember that word that I used, whatever, but determination is basically the word. Conviction. Yeah, there we go. That's the word, right? They gave us higher highs with conviction, right? Something like, let me give you guys an example, right? Let's use a low, right? Let's say this, okay? This low was not broken with conviction because it was a wick. If they broke this low with conviction, AKA just like these highs were all broken with candle closes above them, then then that's what I call with conviction. When I see them drop below a low with a wick, it gives more sweep, right? So for me, just the way that we've closed above all these highs with conviction, it's giving a lot of bullish strength still, right? And so I'm feeling like, yeah, they took this liquidity, but that ain't really what they wanted. So I'm still going ahead and aiming at these highs as far as, the dollar goes this week, right? So I'm still looking at 104.72 when it comes to the dollar this week. I don't think that they're done. But what I'm going to pay attention to today and tomorrow, especially since we got US dollar news in the morning, is I'm going to pay attention to if we trade back into this this gray area that I have shaded here, which is clearly our order block on a higher time frame. Curious to see if we trade back into that, or now that we're on a lower time frame, you guys, should have an idea that these lows are all internal liquidity, right? So I'm going to be paying attention to see how it is that we trade below any of these lows. And then I'm going to look for the same thing I just showed you guys on a higher time frame. I'm going to look for the dollar to drop below one of these areas and then give me an engulfing candle out of one of those levels, right? And that's what I'm looking for on a dollar, right? Sell side liquidity sweep, because I want them to get up here, right? And then an engulfing candle out of one of those areas. Okay, so that's what I'm looking for on the dollar. And the whole external internal thing, it applies on every time frame. So I'm not going to take us down the rabbit hole today so that we have time to get into into like the pairs and stuff like that. I'm not going to take us into the rabbit hole. But the idea just being that now on this time frame, this would be the low of the range and this would be the high of the range, right? So this would be external liquidity and this would be external liquidity here, right? And so that means that the closest area of external liquidity for them to take would be right here. So first, I want to see them trade back to an area of internal liquidity, right, of some sort. Take that so that they have the money that they need to enter into orders to get up here. Because even if they want to buy, somebody has to be willing to sell to them. You cannot buy a car if nobody's willing to sell you a car. So even if we are expecting buys to buy side liquidity, somebody has to be willing to sell, right? There has to be money on the table for somebody to be selling to you. And remember that sell orders or sell side liquidity is located underneath lows, right? And here's a low, here's a swing low, right? So these are the two places that I'm really would be paying attention to, right? As areas where sellers would be interested in selling to us so that we can take buys towards that buy side liquidity. You feel me? So that's what I'm looking for. Like I said, you know, watch that one over a couple times if you need to. But we're going to leave the dollar alone, right? And we're going to get over to Euro USD real quick. All right. So I'm going to look at our Euro USD chart from last week. All right. This was our Euro USD chart from last week. Like I said, they never made it up to the entry level, right? Which was up here, right? Inside of, you know, this zone that we have marked off. Now, I'm not going to get rid of that because that means there's some business up there, right? I'm going to pay attention to that in the future. But the week started just about here, right? That's where last week started. And you guys can see that by Tuesday, we had traded about, like, you know, we were, let me actually put that thing back on here. All right. By Tuesday, we had traded back to about the halfway point of that range that we were looking at. Okay. They traded pretty much, I would say, let's go down to the hour. On the hourly time frame, we can see that on Tuesday, about 5 a.m., 6 a.m. on Tuesday, they took us here, right, to the lows from last week, just about. I mean, not the lows, but that last push up before we got the lows of last week. So a lower low here, right? Boom, lower low here, right? And break, and then they retested back up to that low. And then that's when we saw on Tuesday, they went ahead and gave lower lows, lower highs, and then they sold off for the rest of the week. I did not enter when they made this first sell here. I entered, and let's see if you guys can see it with me, right? I entered on Wednesday, okay? Why did I enter on Wednesday? Well, check it out, all right? Once they went ahead and made this pullback here, all right, you guys will notice on the 4-hour time frame that after sweeping up into this gap, into this imbalance, right, and then dropping, they created a order block here, right, at the top, at the very top of this range on a lower time frame. That's going to be the, you know, top of the external range, right? They came above, boom, right here. Right, we had liquidity right there. They swept that, and then they gave us an engulfing candle down, right? And it's more clear on the 4-hour time frame, right? That's what we have the gray box around, and you can see that the very next candle, right? The very next candle after traded right back into it and then sold off. So that in itself would have been a confirmation on Tuesday, and then they sold off. Now, I didn't catch that move. I don't remember what I had going on, but I had a lot going on because, you know, I've been moving, and I wasn't trying to put myself in no crazy predicaments, right? But I didn't have the chance to take that. But I looked at this entire buy up that was then engulfed by what happened on Tuesday, right? So this whole buy up, right? This whole buy up was eaten up by this drop down. You feel me? Like, they just ate that whole thing up. And so I was just paying attention to them trading back to that, you know, order block, as we would call it, or mitigation is what I would call it, because it's in the middle of all of this. We call it mitigation because they were just, you know, the markets were just recovering, you know, from manipulation in the market, right? So if these buys, you know, took place, then we know that those buys were just so that sellers could get better, you know, better entries above here where people were willing to buy from them and sellers got better prices at a high, and then they went ahead and dropped below that and then came back here to mitigate the buys that went up here, right? AKA break and retest, right? For those of y'all who trade break and retest. But at the end of the day, it was right here on that I went ahead and executed. And from at the time, it was around 10 p.m. when we got this first move well, I'm sorry, not 10 p.m., right? About 1 p.m. when we got the first move here on EURUSD, and then we saw them sell off, right? And go ahead and take those lows. So that was what we had going on EURUSD, and I don't think that it's finished, right? I don't think that it's finished. Just like the dollar is closing higher and higher with conviction, I think that EURUSD is closing lower and lower with conviction, right? We closed below the sell side liquidity over here. Bang, right? They closed below there with conviction. And we have sell side here to pay attention to, right? So that's what I'm going to have my eyes on this week, will be those lows. And again, similar to the dollar, is where will buyers be interested in buying from us? If we're going to be sellers, somebody has to be willing to buy. And where will buyers be interested to buy? Buyers are going to be interested to buy above areas of liquidity, right? I can even go ahead and delete this Fibonacci that we have here. And from that same high of last week, from the high of last week to the low of last week, I can go ahead and throw that thing down in there, and just as a cheat code, I can kind of like use the 62% to the 78%, that everybody likes on the Fibonacci, but I'm not using it just because it's like a magic area. I'm using it because, like, if I'm a seller and there's a 60%, 75% markup on something, like I'm going to be way more interested in selling what I got if I'm going to get almost double what I would have got last week, for selling that thing. You feel me? I'm going to be a lot more interested at that point. So that's where I'm paying attention to when it comes to EURUSD. Pretty much above that 108, I guess, 108.50, and above that 4-hour sell buy side liquidity. You feel me? So we're gonna pay attention to that. I'm gonna put an alert here on EURUSD 108.50. Right. And what I'll be looking for again is for them to come into there, right? And to give me some sort of an engulfing, right? Or a wick, right? I'm not looking to see them close above there with conviction. If I see them going up there with conviction, and the dollar's doing some weird stuff, then I might just say this is invalidated for me. But if I see them come up, give me, like I said, if I see them come up and it's a wick, right? And I see them trade back lower below, then again, I'm just going to be looking for this same thing as everything else, right? Same thing as up here, right? I'm going to look for them to make this engulfing bearish candle, right? Bearish candle that eats up the candle before it. And then I'm going to want to take the sell opportunity as we trade back into there with my stop losses above whatever high they form in that area, aiming for the sell side liquidity here. You feel me? Or at the very minimum, even if I don't aim all the way down there, I don't want to be frisky, then I would just at least aim for the lows of last week, or, for this imbalance right here, aiming for that. All right. So that's what I'll be looking for when it comes to EURUSD. And then NASDAQ, that girl NASDAQ, man, that girl NASDAQ is on a tear right now. Isn't she? So with NASDAQ, we definitely saw, and one thing, what I'll point out about NASDAQ, if you are looking at NASDAQ, if you're looking at US 30, whatever the case is, one thing it is when it comes to NASDAQ is that you can see that NASDAQ right now is giving us these all-time, well, not all-time highs, but highs since August. When I look at SPX 500, I can see that SPX 500 has not taken those highs from August. That means that two things that are supposed to be doing the same thing are not doing the same thing. When I look at US 30, I can see that US 30 also has not traded anywhere near her highs. Well, she already took highs from August back in December, right? They traded above that in December, and as of right now, she's not doing the same thing as NASDAQ, right? So we are looking for potential reversals on these, you know, on NASDAQ at some point, especially because, like I said, we just saw them trade above that external liquidity, right? That's what, you know, NASDAQ went ahead and did, and that's what we were kind of targeting. The reason that I took the NASDAQ buys was because, again, we've been extremely bullish. And when we're very close to external liquidity like this and we're in the uptrend and we have external buy side liquidity above us, they're going to be in a rush to go ahead and get up there. And, you know, that's why, you know, that's what I looked for. Pretty much similar situation here on NASDAQ. You saw them go ahead, retrace back into this imbalance here. They gave us a higher high. Like, this is just very bullish price action. Literally just trading with the trend 100%. You feel me? And again, on the week started, our week was, oh, that's not my chart. This is the better chart to use here. All right, so our week started right here. Let's see, the week started back there. All right, that was the start of our week last week. As you can see, straight bullish for the entire week. And then coming into Wednesday, right, this here, you can see right here on Thursday morning, NASDAQ, this is the only trade that I took on NASDAQ for the week. I mean, I literally just watched all of this action play out. I'm not going to lie to you. I think I took this one on Wednesday as well, but I think it hit my break even before I was able, like it hit my break even, it didn't deliver. But again, on NASDAQ, they traded below this sell side liquidity here from Thursday, traded below it there, going down on the 15-minute time frame. Goodness gracious, these guys. Had to go to the very lowest possible time frame for this thing. But similar situation here. They traded below that sell side liquidity here on this time frame. On the 5-minute time frame, you would say that this was our external liquidity here, and this was our external liquidity up here. I guess I'll use a black line for this. Boom, right? External liquidity there, external liquidity at the highs up there. And so once I saw them trade below here, again, like I said, I didn't see them trade below it with conviction, right? It was a wick that they traded below it with. And then we saw them trade much higher, give us an engulfing candle, right? Because this was the last down candle right here. And then we can see that at 9:15, yeah, what's that, 9:15 a.m.? Yep, 9:15 a.m. we saw them trade right back into it. So the setup was a buy on that order block with the lows below the external liquidity, because if this is what we're looking to see it be, then they shouldn't trade below that low again, right? So that's, 20 pips, and then looking to at least see them take the external liquidity here, right? But of course, I had in mind that we have the monthly buy, right? I had in mind that we also had the monthly buy side liquidity. So I had two entries. I had my safe, I'm going to take my money right here. And then I have we are so close to this monthly buy side liquidity. And it is a Thursday, right? It's a Thursday. I'm thinking they're going to make a rush to that monthly buy side. And I mean, yeah, they definitely did make a rush. They delivered to that thing before lunch, right? Yeah, they delivered to that thing 10:30 a.m. So that was about an hour and they gave about 130 pips, and then they went for another 300, right? So like I was saying earlier, the types of moves that we're looking for, I'm not saying that I'm catching 1 to 14. I caught the 1 to 14, but I took partials along the way, so technically it doesn't end up being a 1 to 14. It's probably like a 1 to 5 or a 1 to 4 or something like that, because I'm taking partials along the way. But the idea that more so is the point is that I didn't get the move that I wanted on Wednesday because they came back and hit my break even. Like I entered here. I probably entered a little bit too early on Wednesday, clearly. But see, on Wednesday, I saw them trade lower here, got a little excited, took my entry too early, and guess what? They came back at 11 a.m., hit my break even, and then they went freaking ballistic. Cool, it's fine. I waited till the next day. And they came down, they gave my entry, didn't come anywhere near the entry again, right? So the types of moves that I'm looking for, it's just, I'm not, you can't be upset. You can't be upset if it comes back and hits your break even, for those of y'all who trade like this. You can't be upset if it comes back and hits your break even. You can't be upset if you miss the move, because you're going to continue to miss moves throughout the week if you're just stuck on the move that you missed from the day before. You feel me? So you just got to chalk it up sometimes as, just take your entry. Like, that's it. That's just very much that simple. Just take your entry, set your stop, set your TP, and let it do its thing. And if it hits your break even, if it hits your stop loss, okay, cool. Reanalyze the market. We still in a bullish trend. I still haven't delivered to the external liquidity, so I'm gonna continue to go with it. And this literally is the same thing that I'm looking to see on the dollar, right? I feel like the dollar still, we still have room to go to that monthly buy or that weekly buy side liquidity. So that's similar thing, like I said, that I want to see on the dollar. I want to see them go ahead and deliver to that weekly buy side liquidity at the top, or at very minimum the daily buy side liquidity. So guess what I'm paying attention to? We're in a bullish trend. I'm paying attention to where buyers are going to want to enter the market, and that's where people are willing to sell to them, which is under lows, right? So I want to see the dollar do the similar thing. Sweep a low, give me an engulfing candle, and then retest that thing. Retest the order block. If they do it, then I'm taking my sells on EURUSD. NASDAQ, I'm not going to lie to y'all, when it comes to predictions on NASDAQ, after we took my objective on the monthly buy side, I want to be in position for the pullback. Like, I'm not even gonna lie to you guys. NASDAQ is just gonna have to be one of those things that I'm gonna have to show up to it, on the market. Like, I'm not gonna try to have a bias on it at the top of the week, because we just entered similar to when the dollar entered this low, and it swept that low, and you saw how much it consolidated before they dropped. Well, right now, after NASDAQ just took this monthly buy side liquidity, they closed above it with conviction, right? Because you got to close above. So I wouldn't be surprised to see them continue and deliver all the way up to 14,300, right? And so I'm in position, if we're going to take buys, if they're going to continue to buy up, cool, I'm in position for that. But given that we just traded above this high from August, guess who's sitting above these highs? It's going to be buyers, right? There's buyers sitting above these highs. There's all type of